Wall Street investors cleared up the fundamental picture on a Friday but did not find any relief. The long-awaited NONFARM payrolls have been released and gave food for thought both for optimists and pessimists. At the same time, the benchmark stock indexes still depend on the corporate reports. The US stock market closed yesterday with minor losses. The Dow Jones slipped by 66 points or 0.19%. The Nasdaq looked a 0.1% downtick. The S&P 500 shed 11 points or 0.25% to close at 4,501 points. The major stock indexes rebounded a bit in the New York pre-market. Futures on the stock indexes added from a 0.14% to 0.7%. The S&P 500 is expected to trade in the intraday corridor between 4,500 and 4,570 points. Wall Street indexes closed yesterday with minor changes as investors turned attention to another jump in the US Treasury yields. Yields over 10-year Treasuries surged to the highest level since November because Fitch downgraded the US credit rating from a AAA to AA+ earlier this week. As a result, the elevated yields over 10-year Treasuries challenged the investment appeal of the stocks. The U.S. Labor Department reported that initial unemployment claims rose modestly last week, whereas layoffs fell in July to the lowest level in 11 months. In a separate report, business activity in the U.S. service sector slowed down, but companies had to deal with the higher commodity prices on the back of beyond demand. Richmond Fed President Thomas Parkin also dampened the risk-on mood. The policymaker said that inflation in the U.S. remained at elevated levels, even though the latest CPI proved easing inflationary pressure. 8 of the 11 major sectors of the S&P 500 declined. Utilities and real estate were the most sensitive to interest rates, hence they fell by 2.3% and 1.4% respectively. After the closing bell, Amazon.com's shares rose as the online retailer predicted that third quarter revenue would beat Wall Street's consensus. Sales were boosted by July's Prime Day sell-off that drew consumers to the platform. Apple shares dropped by less than 1% after the iPhone maker reported better than expected quarterly results, but predicted a further drop in sales. Qualcomm's shares tumbled by 8.2% after a bleak outlook signaled that the biggest smartphone chip maker would be hurt more painfully by the ongoing downturn in the consumer electronics maker. PayPal shares plunged by 12.3% as investors were disappointed with the payment company's quarterly operating margin. On a Friday, futures for the US stock indexes rose, and the first reason was Amazon's optimism, which contradicted Apple's tepid sales forecast. Besides, the catalyst was the official employment report. The US economy maintained a modest pace of job growth in July, but strong wage growth and falling unemployment point to continued tightness in a labor market. The number of jobs in the U.S. public and private sectors increased by 187,000 last month, the Labor Department reported on Friday. Economists predicted an increase in the number of jobs by 200,000, and the data for June was revised down to show a growth of 185,000 jobs instead of the previously reported 209,000. Despite less active employment, the labor market remains tense. The jobless rate slipped to 3.5% from a 3.6% in June. It's much lower than the Fed's median estimate of 4.1% by the fourth quarter this year. Nowadays, traders anticipate the Federal Reserve to terminate the cycle of monetary tightening, and we should not forget that Fed Chairman Jerome Powell signaled that any option would be possible. In the corporate sector, Amazon.com shares surged by 9.2% in a pre-market trading after the company issued an optimistic guidance for the third quarter, while Apple shares shed 2.9%. Shares of peers Microsoft, Alphabet, and Snowflake rose by 0.5% and 5.9% after Amazon's cloud business outperformed the sales estimates. The US dollar index hovered at around 102.60 for the most part of the pre-market. Yesterday, the index climbed by 102.84, the highest level since July 7. And today, the fresh NONFARM payrolls shocked the US dollar's confidence. The figure of 187,000 jobs is lower than the average employment growth of 312,000 in the last 12 months. Still, this reading is twice bigger than the minimum of 70 and 100,000 needed to catch up with the growth of the active working wage. Even despite a decline in the jobless rate, the red-hot data could indicate a soft landing of the Federal Reserve. Immediately after the report, the US dollar weakened by 0.7% against the euro and the 0.4% against the pound sterling, and the Canadian dollar is far from its tip-top shape, though it looked more stable than other major currencies. The USD CAD pay is trading at 1.3360, 0.08% up. The intraday Canada is been between 1.3340 and 1.3380. Unlike the US NONFARM payrolls, the data of Canada's employment did not spring a surprise. The jobless rate in Canada grew to 5.5% in July from a 5.4% in June, in line with the market expectations. The rate has been growing for 3 months straight and stands at the level last recorded in January 2022. The data mirrored some easing in the Canadian labor market, but remained well below the pre-pandemic levels. Unemployment rose by 28,000 to 1,116,800, with notable increases among young people and women of a key age. As for oil prices, which traditionally encourage the looniest growth, Brent futures added a modest 0.2% today and rose to $85.38 per barrel. WTI rose by 0.6%. Despite muted and mixed trading in the crypto market at midday, Bitcoin perked up in the New York pre-market, and the token aims to climb above $29,200. Popular altcoins such as Ethereum, Ripple, Litecoin, Solana, Cardano, and Binance wavered between drops of 3% and gains of 2.6%. The opposite correlation with the US dollar could help Bitcoin assert its strength today, and the news on the crypto industry was mixed. British fintech firm Revolut will stop providing US customers with access to cryptocurrencies, and the company said in a statement released on a Friday. The reason is uncertainty around the cryptocurrency market. Starting from September 2nd, US customers will no longer be able to buy cryptocurrencies on Revolut. Starting from October 3rd, buying, selling, and holding will be completely disabled. Revolut said the move would affect less than 1% of the company's crypto customers worldwide. Meanwhile, Coinbase beat earnings expectations in the second quarter thanks to higher interest income. Its executives said the cryptocurrency exchange looks to win its legal battle with the US securities regulator. Returning to the intraday outlook for the coin number one, its volatility has reached an all-time low of 0.77%. The crypto is trading in a narrow range of 29,000 to 29,200. If Bitcoin manages to gain a foothold above 29,300, this will open the way to 29,700. Alternative scenarios look like a flat movement in the range or a decline to the level of 28,800. Make profits with the InstaForex and keep track on the market news on the InstaForex TV channel. We wish you profitable trading, have a nice weekend, and see you again next week.